FNDX wins on returns and protection. Higher gains at 78% with just a 7% worst year versus IVE's 39% crash. A 39% loss versus just 7%. That's the gap between sleepless nights and actually staying the course when markets crash. FNDX crushed IVE with 23% returns versus 16%, a commanding 7 percentage point victory this year. Over 3 years, FNDX crushed IVE, 70% returns versus 57. That 13-point gap keeps widening. FNDX crushed IVE over 5 years, 78% versus 67. That 11-point gap compounds into serious money. Over 5 years, FNDX delivered a 78% total return, while IVE managed 67%. Same market conditions, but one engine clearly outperformed the other. FNDX's 1.1 Sharpe ratio edges out IVE's 1.0, delivering slightly better returns for every unit of risk taken. FNDX's 1.5 Sortino ratio beats IVE's 1.3, meaning it's delivering better returns when accounting for actual downside risk. FNDX delivers better risk-adjusted returns. Like mechanical leverage, you're getting more output per unit of risk. It outperforms IVE on both Sharpe and Sortino ratios. When markets crashed, both funds took nearly identical hits. FNDX down 19%, IVE down 18%. IVE bounced back in 124 days. FNDX took 285, more than double the recovery time needed. IVE's 39% worst year crash versus FNDX's 7% drop reveals which fund actually protects you when markets collapse. FNDX's worst year was a gentle negative 7% drop, while IVE crashed negative 39%. That's the difference between weathering a storm and getting absolutely hammered. IVE saves you money with a 0.18% expense ratio, while FNDX costs 0.25%. That's 7 extra basis points annually. That 7 basis point fee gap quietly drains 35 basis points over 5 years. IVE keeps more capital working for you. 7 cents per $100 doesn't sound like much, but that's real couch change adding up over decades. IVE's cheaper at 0.18% versus FNDX's 0.25%. FNDX dominates the scoreboard. Higher returns at 78% versus 67%, better risk ratios, and crucially, it avoided IVE's devastating 39% collapse during the worst year. FNDX bets big on communication services at 10%, nearly triple IVE's 4% allocation. That's a major positioning difference. IVE leans heavier into large caps at 45%, while FNDX spreads more evenly across sizes at 37%. FNDX grabs a bigger pizza slice of communication services at 10%, while IVE loads up on large caps at 45%. Different strategies, different bites. FNDX spreads risk across 729 stocks, while IVE concentrates in just 396 positions. FNDX spreads risk across 729 stocks, while IVE's 396 holdings mean bigger bets on individual companies. FNDX spreads your investment across 729 stocks, while IVE holds just 396, nearly double the diversification, which means less risk if any single stock crashes. FNDX delivers better returns with far less pain. 78% gains versus just a 7% worst year beats IVE's brutal swings. IVE's your bounce back specialist. recovering quicker from market stumbles. FNDX is the marathon champion. Stronger performance overall, just slower getting up after falls. Standard disclaimers here. Do your homework, consult pros, and invest at your own risk. If you enjoyed this deep dive, hit subscribe for weekly data-driven breakdowns and ETF comparisons every week.